Hey guys, welcome to another video brought to you by Total Control Traders. First off, I wanted to thank all of you for your support. The channel has been steadily growing and we are now on track to 200 subscribers. Thank you everyone for watching the videos and your consistent support. All right, there's a message that I want to deliver before we get into the crazy market that we're witnessing, okay? So this is what I shared on our trading group, our trading community, and welcome to Kelvin, just joining our community today. So this is type of thing that you can expect coming in. Now on February 12th, by February 12th, there were a few correct callouts already. We began anticipating pullback towards end of January, and that happened with complete V-shape. Began anticipating slight rejection on one-to-one extension at 39.27 on SPX, and that happened as well. And then wanted to see healthy consolidation into daily bull flag before the next breakout, and we saw that. Then we anticipated the weekly bull flag to form earlier this week. And we got that. So this was, as you can see, this was me milking it. Because, you know what? You're never going to be always, you cannot be always right on the market. So that's why I said, going to milk it when I can. Funny thing is, today's message will likely be taking it easy for the rest of the week. It's been a very extremely busy February. Market bull has treated us extremely generously. And funny how this next part is pretty important too. When the market slaps you in the face, make sure to be humble. Take some time off and reflect, learn from the mistake. Now in this particular case, our mistake, or my mistake, was that we played GME bull yesterday and we had great return on it. But while doing so, the mistake was that we should have realized the potential of a repeat from last time when GME went parabolic and picked up more hedges immediately while we were playing GME bull. So kind of funny how this message is being sent out the day after I milked it. Anyways, wanted to share that with you guys. This is the type of thing that you can expect in the community. It's not even that being, let's see, it's not even the fact that we call out correctly on the markets that makes the community worth it. And, I really hate to do this next part, but I feel that it's necessary in order to deliver the purpose of creating this channel. And that is to help those who are in need, those who are seeking help, all of you who have subscribed to this channel. Want to help you, and partly in doing so, I have to do this next part. Now, even though we've called out the last 4 big moves on the market, basically like to the just exactly on spot, but the true value of the membership are within days such as today. It's not the part where we correctly call out moves beforehand, because it's essentially you can just get in the next day and still make money as long as the trend is in your favor. And that's why I keep emphasizing, play with the trend until it ends. And the trend is potentially ending now. We need a little bit more information, and there is a lot of red flags that are showing up, and that's what we're going to dive into today's video. Not going to go through too many tickers today. We will be doing a market deep dive instead. For everyone who's been watching the videos daily, you probably would have already made a decent gain up till now, because the trend, or ever since the beginning of the channel, or the starting of this channel, I believe is January 4th. Yeah, January 4th. So you would have made decent gains for the last 2 months. But now comes a crucial point where this channel is going to show you the difference. All right, Total Control Traders. We're going to show you how we're different than others out there. It's days like today that justifies the cost for that membership. Today alone, by being in our trading community, it most likely would have saved you multiple folds of that cost. The days without clear direction, the days that defies your thesis, without having access to the 24/7 info in our trading community, you would have lost the opportunity. And by the time you watch this video, by the time that you make the trade tomorrow to follow what we have done in the trading community, the market could very well be down another 3%. And then there goes another multiple folds of the membership cost. And that's why I say it's days like today that justifies the cost of the membership. It's not even the days that you're playing with the trend. Those are the easy days. And think of it as an investment to protect your capital. If you knew there was a way to save hundreds, thousands, or even hundreds of thousands to purchase that dream house of yours, would you not pay a premium in order to gain that edge? And that's the message of the day. I hate to do advertising, and that's why I haven't done any advertising, paid advertising, or whatsoever in this channel so far up to this point. But I feel like it is very important to deliver that message right now during market uncertainty. This is where the value of the channel and the trading community comes in. Okay? All right. Without further ado, let's get into the market. What happened? Why am I seeing huge red flags? People, essentially you can look at this as a 4-hour. Now, again, chart's messy, market's uncertain, keeping most of the lines in play. Let's see, double bottom, broke up ever so slightly. I haven't really looked at the market ever since it's about noon today. I sold out most of my positions. Regardless, you know what? Let's not get into the details of the trades. Part of the benefit for being in the community. But, all right, what am I seeing here? Right now, you could say that this is a 4-hour bull divergence. You can see slight double bottom, broke it under ever so slightly, making that perfect bull divergence. But even though this was anticipated, why are we going majority cash? Now, emphasis on majority, not all cash. Okay, DHA sent out a message saying, don't be afraid to protect your capital, but don't be afraid to participate. We are keeping that foot in to participate because essentially market is still uncertain, but there are big red flags that are causing me personally to go majority cash. All right. First thing, let's do specifically what the red flags are on SPX. Okay, so we can see from back here, lower low, lower high, lower low. Came back up, broke through the trend line, this inner trend line. Almost made a higher high. Nope, break out, fake out. Came right back down. So that's a lower high, lower low, lower high, lower low. Now we got that trend reversal yesterday. Lower high, higher low, higher high, breaking through both of the trend lines that were formed from back here. Now this inner trend line is still key to note because the upper trend line only has 2 touches, so it wouldn't be that strong. But the inner trend line is where the strength is at. 1, 2, 3, 4, 5 sections of rejections. There's multiple touches on each section as well. So strength is right here. However, today you see we broke through it, all the GPs that we could see, all in one go. That to me is one red flag, right? Now, there's a lot of arguments on how you can look at this because there is lots of bull thesis out there. I mean, if you got into bull entries down right down here at that bull divergence, amazing entry. You got an easy stop at that. No, even if you just put it a little bit under, just below 3,800, that is an easy bull play. Easy. Perfect. Anyways, so first red flag just blew through all sorts of support. Now, partially this is due to GME, but really, second time, is it all GME? Well, we're going to go into more details using other indicators, but this is one. Okay, and we are seeing a little bit of, I would call this lack of bounce so far, you know, on a second 4-hour candle of where we're supposed to be bounced. From a decent bull divergence, we're seeing an upper wick forming already. I mean, it is still 2.5 hours to go on this candle, so there's still lots of time, but selling pressure remains. Look at this huge upper candle too, or upper wick too. You know, it is definitely a big cause for concern. But we will keep a foot in the door in the case that we do V-shape. However, that foot is now more so like a toe instead of a foot. Okay? All right. NAS. Sector rotation. We see, actually, there was one other thing I wanted to check. So through this whole bounce, worst case scenario, always keep this in mind, okay? If this is the beginning of the consolidation, and as mentioned in yesterday's video, there could be an elongated, very dragged out sideways or downward consolidation. What does that look like? Well, you draw, this has been our bull run, this whole near 4 months of bull run. You just draw a fib from the low of October 30th to the high of February 15th. And I already have that drawn here, so I'm not going to have two up. So if you're to look at this, you know, on a back test of 0.382, even just a 0.382, that's considered a strong market. Wow, the chart's messy. And I do apologize if it's going to be hard for you guys to see. There's trend lines everywhere. Jesus. The last time we had last time I had a crazy messy chart was like somewhere back here. Anyways, it's a sign of uncertain market, okay? And all these are still in play, so I am gonna keep them. This one is like less likely in play now because channel, you know, broke bear, V-shape back up. Now we're breaking bear back to back twice. Anyways, so even if we were to consolidate to this 0.382, which is the previous, which lines up with the previous high of 36.7, or we're just gonna use SPY prices going forward, 367, there's back test of 366, and you can see clear support back here. So that lines up with that. Even if we were to bounce to or consolidate to the 0.382, strong market, and this would make sense. Let's see, the weekly bull flag is still intact. It is. We closed above the weekly 8, but volume continues to come in. What does a monthly look like? Oh, there we go. Second cause for concern. Not exactly a red flag, but cause for concern. We are extended from the weekly or monthly 8. We were quite extended, actually. This was 10% extension away from the monthly 8. The last time, 10%. So, this is another reason why I'm thinking market needs a little bit more consolidation, especially now that we're in the end of February. Generally, March is bullish, but not as bullish as February, as a lot of funds tend to come into the market in February, and there are multiple reasons aside from just RSP season. Because that's Canadian based, right? We're looking at US market. Anyways, all right. So that's it on SPX overall. Market uncertainty, but now I am looking bearish. I am not playing bearish yet, made a decent gain on hedge today, but decided to exit and remain cash, and that is partially due to the uncertainty. All right, nice. NAS, right back to that key line. So if we were to do the same thing, Fib, October low, October 30th low to February high, we are on that 0.382. So NAS is showing clear weakness already. Where we're supposed to be bouncing from, we bounced yesterday, and straight rejection from that daily 8. Huge rejection coming down, leading me to think we will be revisiting around that GP area, which lines up with this key previous resistance, back tested as support. This will be a key zone. This is another key zone up here from this previous all-time high, but not seeing too strong of a reaction. I mean, there was 2 rejections, blew through it, came back down, blew through it, support. So as for support and resistance zone wise, I don't look at this as strong. It does line up with the 0.5 of the Fib retracement, but ultimately based on how weak the NAS is looking, I will be looking down somewhere around the GP area. Looking at this NAS movement, tomorrow, if we were to see further bear action, consider the trend changed. Because on the daily, you will be making a lower low. And then if you zoom in on the 4-hour, you will be making a lower low, continuing the trend, lower low, lower high, lower low, lower high, now a lower low. Okay? So must hold zone. And considering how we've came right back to that must hold zone right after the bounce with a lack of follow through, cash is my favorite position in this type of environment. And the other thing is today's market is a little bit different than last time. You know, last time I was way oversold, and then we saw the bounce, and then lack of follow through, and then today was a little bit more. If you were to look at the 5-minute, let's look at the 5-minute on today. This was morning high, then control sell off, rejection on the 5, control sell off, came back, bounced over it, lack of follow through, control sell off. You see that we just grinded down on the 5-minute 8, got extended, bounce, lower, higher low, higher high, and then lack of follow through again, then control sell off right along that 5-minute 8, and then key zone to hold. Bounce, lack of follow through again, right back to this key zone to hold, even lesser bounce, broke through. So this, another reason why I'm thinking market is looking at a trend reversal. All right, let's look at VIX. No, sorry, 10-year over 2-year. Wow. You see that? Key, was it previous all-time high? Previous all-time high, 10-year over 2-year, huge rejection. Damn, we should have looked at this a few days ago. Well, this is another oversight. I remember seeing these 3 candles right at that previous all-time high with huge upper wicks forming. I remember talking about that. Maybe even this one too. But then I missed the next 2 days. So this is another potential likely cause of why the market is pulling back. Generally, 10-year over 2-year is a leading indicator, but not this quick or this, how do you say it? You shouldn't see a reaction in the market as soon as this happened, kind of thing. If you look back here, you know, when it's this low, it took months for the consolidation to happen in the market, and this was by far still my best call out. I would say, you know, I advised all my clients at CIBC, watch for the market correction, watch for it, It's okay to be more conservative. I converted all the clients I had met with through 2019 till before I left. I think it was mid 2019 I started warning my clients and converted all those who accepted the advice to more conservative, and then boom, market crash. And now I've always thought about this. This is very concerning in the sense of how fast we ran. So the last time we ran, this is just a ballpark, near 1200% on 1,022 days, trading days. This time we ran nearing that 1200% again, but in 1/quarter of the time, 248 trading days. So this is a little bit of a concern for me, in the sense that not only did the market recover way too fast, look at SPY, look at SPX. Let's delete the chart. Look how fast this recovered. From the pandemic low, we have ran up another 16.65% return. And remember that euphoria that I was talking about that could potentially come in? We are seeing that. A lot of Canadian brokers are having issues with their services lately. And that's partially due to all these new accounts that they're opening. So, hey, you know what? I just saw something. So yeah, euphoria seems to be coming in, settling in, and that's the type of environment that you want to be cautious. All right, so on what I just saw here, on the bigger picture of SPX, megaphone pattern. Let's draw this out for you guys. So upper trend line, lower trend line, megaphone pattern. This upper trend line, we broke through. You can see clear rejections from dating all the way back to, I think it was 2012, rejection, then grinded up along it, rejection again on that 2018 market correction, rejection again on that 2020 market correction, and now we finally broke through after this crazy bull run that we've had. At the very minimal, now remember, we have not back tested it. We have not back tested it. Ever since that November run, we just went straight shot. If this is the beginning of a market consolidation, ideal entry, first entry, I'd be eyeing that 0.382. Now there's a triple confluence there. Instead of just a double that we're talking about, the 0.382 alongside the previous high. Now there's a triple. 0.382, previous high, key zone, as well as this megaphone line that we have not back tested yet. So keep your eyes on this. I'm going to see how this works out. Nope. Let's do it right here. Probably closer actually. All right. Yeah. Watch that. Megaphone, upper trend line, back test. Only makes sense. Now that would be upon the thesis break of this weekly bull flag setup. Looking at this, we are dropping a lot faster than ideal for a bull flag setup. And let's show you an example of what happens. Booyah. There's an example of what happens when you drop more than ideal on a bull flag setup. The video was looking for a daily bull flag setup. Boom, we dropped below the 8. And then we drop further. And then this was a bounce. Now we are seeing that real bear volume coming in. This is what happens when that bull flag setup doesn't work out. Instead, you'll be looking at a lot further opposite direction. And there is a potential on SPX doing just that. Okay. All right. So back to 10 year over 2 year. Big drop, holding that weekly 8. Huge run, a quarter of the time of last time. Now I want to make a kept my drawings. I want to make a note of where is it? There it is. So I'm gonna make a note of the differences of this. Come on, there we go. Like that. So I'm gonna make a note, keep this here. Last time we ran up after market correction, the 08, the big correction. And this is the big correction in 2020. We ran up using a quarter of the time in roughly the same percentage. So very concerning. On the daily, we're seeing huge pullback. So that's red flag number 2. Next, VIX, red flag number 3. We saw the pop today, and I stand corrected. 13 weeks? Nah. Market just said, let's give it another pop on VIX. What is this? 2 weeks, 4 weeks after the last pop. Let's give everyone the surprise. Yeah, we're near that apex. Let's do it. All right, so market or VIX is seeing a pop. We are still holding that key price of 21.40. Closed down under it, got bought up right away. If VIX does not make a move here now, we will fade down and likely to close under 20 on the next move. Based on where the market's at, makes sense for VIX to pop now into a new high, breaking this previous pop. All right, US dollars. Now this is the interesting part. US dollars is not, or it was breaking down earlier today and yesterday. And that gave me some bull confidence. But we do see that pop now. But we are still dropping. So US dollars is not giving clear signs of where the market wants to go, or market wants to take us. Until it does, I'm going to be keeping a close eye on it. But doesn't seem to be giving clear directions lately. Now remember, if market does go into consolidation phase, US dollar is actually a pretty good position in itself, because it is considered a safe haven. So essentially, if market pulls back, you should see bull run on US dollars. Okay, so that's VIX, gold. No, don't care. Okay, all right. Let's do this. Hottest tickers and requested tickers. That was the market. My goodness, the market took 29 minutes alone. Hope you guys watched the whole thing. I really hope you guys watched the whole thing. There is, the reason why I do deep dives. Anyways, all right, hottest stickers. First one, Bitcoin. Huge weekly, daily, whatever you want to call it. Bear divergence still playing out. We are still holding that key zone. So once that has been broken, we'll anticipate further downside. We are a little bit extended from the daily 8, so we'll likely hang out here, form a bear flag. Give me 1 sec, guys. My goodness. Seems like the dog is getting more yappy as he ages. Anyone who walks by. Anyways, that's Bitcoin. Next, let's do Tesla as the hottest ticker. There's not going to be too many hot tickers out there. You know, NVDA not anymore, PLTR probably not anymore, FSR still hot, and we will do that. But yeah, most tickers are going to be trending the direction that the market is trending during a consolidation phase. Last time was more so a what are they? I can never remember the word. The other word for consolidation, but it's not a huge pullback. But yeah, last time was that. It's you when you see not the whole market, every single ticker is pulling back. That's not consolidation. This time we're seeing every single ticker is pulling back. All right, Tesla. Not looking so ideal. Rejecting. Well, didn't even touch the 88, and now we're rejecting. This has been an amazing bounce. Comparing to the market, it is actually relatively strong still. And if you think about it, market is already at Wednesday, Tuesday's low. Is it only Tuesday? Oh yeah. Okay. So yeah, market's already at Tuesday's low. Tesla is not. So that's why I wanted to bring up Tesla. Tesla actually looks relatively strong versus the market. I'm still in the position for Tesla. Kathy bought too. And in the case that the market does bounce, this is a relative strength. Would anticipate further upside versus the market. Sorry, Nat. Lots of throat clearing. Anyways, next one, FSR. Red flag. I just pictured a siren going off in my head. Yeah, so red flag on the FSR. All-time high, lack of follow-through, partially due to the market, but earnings is coming up. It's supposed to be today. So let's check it. Oh, did I click something? Yeah. February 25th, it is out. FSR earnings surprised 37.5%. So it's an earnings beat. I thought they usually summarize it for you here. Loss of 5 cents. Revenue of 0. Consensus loss was 8 cents. So they lost less. It's a beat. Small beat. Still a beat. But red flag. Like we are extending from the 88. Likely to see a little bit more consolidation. If not, an inside bar tomorrow. Bear volume not significant comparing to the bull volume we had yesterday. So keep an eye on it. There is still bull play in FSR. Again, relative strength to the market. Next, I'm going to take a quick look at this one. Took profits on it. All right, so it's looking a little bit more bearish now. Bearish on QS. Bear volumes outweighing bull volumes now. And after these two huge pops, would anticipate further upside. But essentially, it did touch that $70 price target upgrade. So it's a little bit more uncertain on QS now. Give it a little bit more time. See some price action development. Don't FOMO in QS. It's okay to buy in late. We had an amazing trade on this already. Entered around that, what is this, 40, low 40 zone. And got one sell around that 66 area. Didn't nail the top. Whatever. You know, we got a pretty good sell here. And then just sold the rest of positions today in the 60s area, low 60s area. It's been an amazing 50% plus even just on the commons, not to mention the calls. So be patient on the re-entry. I think Rafaela requested Ford. The siren's going off again here. New, not all-time high, new 52-week high, break of this wedge, break of the key resistance, breakout, fake out. Lack of follow-through, huge bearish price action. Found a little bit of support at that 88, but we did close near that low of day. Big red flag. Okay, Ford not looking so great anymore. This, and that's why I didn't play it on this breakout. When I was looking at it, chart was looking very nice, but it's choppy. Now, I don't have too much experience playing this ticker. I played it once. I have to do a little bit more research, backdating, to see what the chart actually looks like. But seems like it likes to do fake outs. From what I'm seeing, this is the upper trend line. This is the lower trend line. It broke down, fake out, and then bounced back up. And then here, yeah, same idea. There's a wedge developed here, break up, fake out, and then down. So it doesn't look like it's too much of an ideal, like even this wedge, it's hard to clearly draw this wedge. And you can see here, even if we would draw it to the wicks, you can see there's another breakdown, fake out, and now a breakout, fake out. So I might actually remove this chart just completely. It's lots of fake outs. Anyways, that is it for today's video. Thank you for watching. Hope you guys enjoy the content. Don't forget to give a thumbs up. If you're looking to build that pot of gold and enjoy the content that we provide, please consider subscribing to our channel, where we provide new videos daily. Also, check out our website at totalcontroltraders.com. We offer a 7-day free trial to our trading chatting platform, where trading ideas are shared and charts are reviewed live. Hope you guys stay safe and be in control. Thanks for watching. I will see you guys in the next video.